Good morning. Good morning, everyone. Thanks so much for taking the time to join us today. Really thrilled to be here, be back in Barcelona. It's a true privilege to be here on stage with this esteemed group of executives from a cross-section from the capital markets industry here today. Here with, to my left is Andres van de Villa, Bill Monahan, Nitin Gaur, and Sean Zhang. I'll let them all introduce themselves, if you would. Andres?
Okay. So first of all, thank you very much for inviting me to join this panel. My name is Andres, and I'm leading the efforts about digital asset ecosystem in BBVA Asset Management and Global Wealth.
Bill Monahan, I'm the CEO of Simple. Simple is a new company that's been established to manage standing settlement instructions, which are things like bank account details, security account details, so where transactions settle. And we're looking to make the process a lot more efficient than it is today.
Hey, my name is Nitin. Glad to be here. Great event, great energy. I serve as a global head of digital asset and technology design at State Street, one of the largest custodian banks in the world. Prior to this, I was founder and director of digital asset and labs at IBM. So glad to be here.
Hi, lovely to meet you all. My name is Chen. I work for Swift in capital market strategy. I'm based in London, and I have a very strong interest in digital assets and blockchain and DLT, everything related. Very happy to be here. Would love to talk to as many of you as possible during the 2 days at SmartCon.
Excellent. Thank you all very much. And as you're all working for either a bank or servicing banks and servicing the capital markets industry here today, definitely looking forward to hearing your insights about what you're facing, what you're happen to be looking at in the future as well. So today we'll talk a little bit about how the industry has evolved, what the trigger mechanisms that each panelist has seen, and some of the levers that they think that will be able to get more interest from the banking industry to put more assets on chain. And to start, I'm going to add this first question will actually be posed to both Nitin and Andres. So I guess we can start with Nitin. What do you foresee as the biggest challenge for banks working with blockchain today?
Yeah. So moving from tech to banking, I have to make this disclosure. All the views are my own, not of my employer, which is an interesting transition to make this statement every time you speak. But I recently wrote an article on this. I spent a lion's share of my career figuring out the existing financial system and the transition to the on-chain blockchain reality that we're experiencing. And I think in my recent article, I talked about two impediments. And one is a unified, harmonized operational framework. So the existing world exists. We are moving assets, which is largely messaging based. And there's a whole slew of people, process, technology that's employed to ensure the assets are moving, we are compliant, and all regulation and all sort of checks and balances are in place for this to work. There comes in blockchain, which is aiming to disrupt and challenge the status quo. And so you begin to see the velocity mismatch of massive increase in veracity of transactions that are processing. So the operation framework that is meant or was designed for the old world has to also adapt and adopt the newer technology and the changes that technology brings. So that is one big challenge. I'll leave it at that for now. Second thing, I think, and we are here at Chainlink, and single most design imperative to me has been interoperability. And interoperability because me and my cohorts are working in different technology sets. We're looking at different chains. You have newer chains emerging. You have Avalanche. You have Aptos. You have offshoot of Ethereum. You have all these different technical areas. But you also have an older system. So interoperability is not just the challenge between the various competing blockchain ecosystems, where whether you have a personal preference or a asset-specific requirement that you make a choice behind a blockchain, but also the older system, which is messaging-based. So interoperability has been sort of my focus actually for a decade now, because we have been, when I was at IBM, is focusing on the technical challenges we need to solve for us to reach a point where I can achieve the first problem, which is the harmonized operational framework, which is essentially a risk model for the entire financial services industry. So I'll pause at that and love to get Andreas' opinion as well.
Thank you, Nitin.
Thank you, Nathan. I think that, in my opinion, there are three main challenges to face with when we are talking about the use of blockchain in traditional finance systems. The first one is the operating one, as you said, and we have to understand that the path from today to a fully on-chain optimized target operating model will be last years. And we have to understand, too, that in companies such BBVA Asset Management and Global Wealth, there are simple processes with high levels of automation and where there are few actors involved and where blockchain benefits could be blurred, combined or coexisting with other complex processes where there are many actors, where the levels of automation are not high enough, and where the challenging thing there is to coordinate all those actors in the same structure based on the blockchain without frictions. And the second challenge is technology in terms of scalability and interoperability, because we are global institutions, so we want to build solutions based on blockchain, but build once and reuse many with that principle. And I think that Chainlink with the latest launching have more to say about interoperability. Yeah. And finally, the last challenge for us is the regulation challenge, because as I have mentioned in the second challenge, the technology one, we are global and we have to obviously comply with all the demands, all the requirements of each local regulator and each local regulatory framework. So we know that even if the regulators in each country are approaching the same, there are different paces or different speeds in order to approach blockchain, the use of blockchain in this traditional finance system. So we have to comply with all the demands and know very well what we can do, where we can do, and the way we can do it.
Perfect. Thank you very much. Interesting perspectives, without a doubt, and definitely maybe we'll come back to that a little bit later to ask Bill and Sean a little bit about that. But to take it a step further, Sean, if you had to provide some of your thoughts on things, what do you think some of the implications for post-trade services, given that your role at SWIFT, from the impact it may have on settlement as banks are starting to look to put more assets on chain?
Yes, so I guess it can be broken down into a few areas. So for instance, for the post-trade companies, especially those that especially those who directly hold the underlying beneficiary ownership of records, I think we already start to see them moving in terms of wrapping their head around digital assets. What is blockchain? What is DLT? What does it mean for me and my clients? And many of them have started to run blockchain as a business and understand how to sort of operate blockchain operations on an ongoing basis. So the likes of Euroclear, building their own digital CSD is a very good example. And then secondly, I think we're probably going to also start seeing some ambitious players moving up and down the value chain and try to capture more value, try to create more direct linkages with the end users, and thus shorten the chain to reach the end customers and create a more efficient market system per se. So I think, for instance, some asset managers are currently offering digital asset wallets through which the end users can actually invest and hold assets directly with them without necessarily having, for instance, the traditional custodians and CSD in between. And also, I think, thirdly, we're probably also seeing financial market infrastructures stepping up to play a role in the space. Because I think, as you might know, the marriage between Web3 company and traditional financial industry is not necessarily an easy one. It takes a lot of getting to know each other. It takes a lot of building that relationship and trust, overcome some cultural differences. And the conversations always gets a bit challenging when it comes to, for instance, touching or building or integrating into the core banking system of some of the banking players. So that's actually the pain point that our user community has come to SWIFT about. They were saying that we already know you guys. You're the global cooperative. We're already connected to your infrastructure. Can you be the sort of the gateway, the point of connectivity to help us stay engaged with digital assets and Web3 world? So that's also a very interesting trend I find for myself. And lastly, I think what we already start to see is that there's increase in fragmentation around the digital asset space, because as you can imagine, or as you have said, different banks, different players, when they build different use cases, it tend to be built on different chains using different languages. So I think if we do not start to think about interoperability as well as having that common set of standards, to kind of set off in our journey, we're probably going to see a very fragmented, tokenized digital asset space, both in terms of price discovery as well as post-trade settlement and collateral management.
Perfect. Thank you so much. And very interesting. I guess to follow on that, to expand a little bit further on the asset tokenization side, Nitin, I'd love to hear your thoughts on some of the challenges in terms of, if you were to expand it from your vantage point in terms of wider adoption, to take what Sean had mentioned a step further.
So again, I wrote another article on this piece, this chicken and egg problem, is that the industry, which I'm part of, is looking into tokenizing various asset classes. So you broadly have 4 asset classes, and you look at equities and tokenized bonds and gold and commodities and so on and so forth. But you need an infrastructure. And I think, to me, and that's also true for crypto industry, I think there's a massive lack of investment in the infrastructure, which provides the entire framing around the verification validation framework, all the stuff that Ari talks about, which is the DEE framework, the secure pipes that need to connect, the massive coordination. So the question is chicken or egg, and do we build the infrastructure first? Because infrastructure, just like anything else, is quite expensive. And to sort of justify the massive investments that the likes of SWIFT and the likes of sort of State Street and BBVA and other financial industry has to do to make that investment and having this ability, the rails that we build to be able to move these tokenized assets? Or do we go with tokenizing assets first and begin to look at public chains as utility? So I've explored both those models, and I personally think that the investment both from the traditional finance industry and the investments that the crypto industry needs to make, I think they're still deficient in terms of what we need to build as an infrastructure. So I always go back to, I have a moniker in my head that I always explain to our executives and the industry in general is 3 I's. The first I is infrastructure. You need this massive set of infrastructures for building rails and building the cryptography that backs these rails. Then you have instruments. So, you can have tokenized fiat, which is stablecoin, CBDCs. You can have tokenized bonds. And regardless of the chains that people have adopted, we should be able to move the assets like we do today in terms of messaging formats. And the third I is insights, that suddenly now I'm applying AI and machine learning to be able to, which also requires a massive compute infrastructure, to be able to do things like AML, KYC, and the business analysis that's needed to keep the business running. So I think that's where there's a technical sort of challenge, and once we solve that, then we're able to then convince the regulators on the security and resiliency, which is one of the primary requirements that we begin to work when we work with regulators, to ensure that the financial systems that we are crafting is not only better, but resilient and more secure, and sort of gives us that framing that supports the next generation of transactions that's coming on board. I think blockchain certainly has the foundational technology potential to it, but we need to make a bit more investment as we have made in our existing infrastructure. So I would pause there and see if that made sense.
No, it totally does, and actually it's a great segue into what I'd like to ask Bill about, because I think to your point in terms of taking what's happening today in Web 2 and translating that into Web 3. So Bill, CEO of Simple, I guess if you could first define what standing settlement instructions are, and for the audience's purposes, it's a key component in terms of the success of any transaction that settles today. And Bill's built a solution. I'll let him explain a little bit further, but I think has taken it to Nitin's point to the next level. And Bill, if you could provide some insight in terms of what your thoughts on how standing settlement instructions, a very core component of settlement today that most folks don't really know about. How do you see that playing a larger role for assets that are being put on chain that Nitin was speaking about?
Yeah, I do think standing settlement instructions are very important for the industry generally. So an SSI or a standing settlement instruction, they are the details needed to be able to settle every single transaction that is executed today. So it's your bank account details, your security account details, the trading accounts, whatever it is. It's the information that allows for the two sides of a transaction to swap those assets. So what we've done at Simple is we've built our solution on R3's Corda to allow for the dissemination of that information. A lot of that happens manually today. You get PDFs over email. Clients have to interpret that information. They have to put it into their systems. But then it means it moves around the industry in a very manual way. As we move from Web 2 to Web 3, I definitely see that post-trade will become more of an on-chain process. There definitely won't be one chain. There'll be several chains, and the interaction between those chains is super important to make sure that it works as well as it does today. So the way that we see Simple playing a role potentially in the future connected to CCIP is that if you have an exchange where an asset is traded, could be any type of asset at all, that transaction needs to settle. So Simple could have the details to show in the financial institution world where a security is held. So we could be the directory to say, for this particular account, who is the custodian of that asset, where are the securities actually held, and are they available? So assets can be used for collateral, they can be used to be lent, so securities lending, and there are other use cases where the securities may not be available, but if it's being sold, one of the big issues that I think will happen as the industry moves from T+2 to T+1 next year in the US and Canada is that's going to be a real bottleneck. It's going to cause a huge amount of settlement issues. And I think actually the move to T+1 will start to really move the conversation on to T0 and Web3 to make sure that everything is settling as quickly as possible. So you need a process where you can look up and quickly check where the assets are. If they're not available, get them back, and then allow for T0 or netted T0 settlement on trade date. So you don't have the real-time funding issues. The information's there. The cash has to be available, so you're not pre-funding it all. And I think what we're looking to do at Simple is to make that process as smooth as possible by having all of the settlement information, the SSIs, digitized in a format that the industry can use. We're going to be available on an open permission basis as well. So today's infrastructure isn't open. You can get access if you are a particular cyber client, but we want to enable any third party to come in and get that information if they're playing a role in the settlement industry.
Thank you, Bill. Appreciate that. It's a core component. I think it'll certainly continue to be over time. I guess if we were to pivot and go back a little bit to Andreas, from your vantage point at BBVA, how much of an increased interest in the digital assets are you seeing from institutions overall? Are you seeing that, and ultimately, what specific types are you seeing the institutions move towards?
So in this point, I think that the reality is that the industry related to crypto, to blockchain, and digital assets ecosystem has been surrounded by noise and controversy during the last years, and it had its own Lehman Brothers moment twice, probably, with the Terra Luna collapse and the FTX breakdown. And if you add to the equation the lack of regulation or even the absence of regulation in some countries or regions, you obtain as a result a world of uncertainty where growth is very difficult or is challenging. However, there are not bad news, everything. There are good news because I think that the industry is holding up properly. Indeed, from my point of view, and what we see is that the potential increase of the appetite of clients to allocate digital assets in their portfolio, it's growing, and the last survey of EY confirms that figures that more and more institutional, maybe small size institutional such as family offices and clients from segments like affluent segment or high net worth investors would like to invest and allocate digital assets in the short term, probably from 2024 and 2025. And I think that the traditional financial institutions that we act as intermediaries, we have an opportunity niche because those kind of clients would like to go with a traditional partner in order to entry in those markets that, due to the benefits of blockchain, could have access like the alternative investment markets, like private equity or real estate. About the second part of the question, which asset class will tokenize first, I think that probably fiat and all those asset classes that are under the scope of the DLT pilot regime, such as bonds, equities, and mutual funds, will be the first. And after that, we have to learn about tokenization of the instruments, as Nathan said. We have to open a different door in terms of probably the alternative markets, because for sure that blockchain technology will allow us to break down the barriers for our clients and make secondary markets and potential improvement of the liquidity of those markets. So I think that maybe first more plain vanilla products and then go into the alternatives that have a long path to walk.
To add to that, and I guess this will be a two-part question, or at least between you, Andres, and Nitin, from a banking perspective, and I know between the other two panelists we could also have them answer as well, but just for today's, for purposes of today, if you were to say, okay, will the banks do it just because they want to, or are they being pushed by another type of organization? And if so, would that be brokers, asset managers, and why? I guess for the audience's purposes that don't really know the ecosystem as much, I don't know if you would be able to add.
So two things on this side. One is that I studied the space for a long time. That's the prime reason for me moving from tech to financial industries, to actually understand how the system works. And you'll find that, one, it is disruptive. So there is a certain sense of this disruptive sense to say, we need to do something because this is going to disrupt our industry and we need to keep up with it. Second play is transformation. Like, things are not exactly where we are, where we want to be. And so we see blockchain technology and the various sort of adjunct technologies like interoperability, for example, as CCIP has done, is brilliant, is to be able to adopt that whole element and say, can we use this for transformation per se? But there's a challenge. The challenge is, if you look at the entire landscape of all these different assets, and I've said this before, $470 trillion worth of total global bankable assets that we look into, there's a lot of regulation around public markets. So this is equity and stocks and bonds that you deal with. But then you also have private markets, which is 4 times bigger than the traditional securities, which is less regulated. So when you have less regulatory headwinds, I find an avenue that I can go and do these things to make the efficiency use case, to say I have trade, trust, ownership, and I tokenize private equity or private markets, real estate, and so on and so forth. And if I can build the infrastructure, which I mentioned earlier, can I not adopt the same infrastructure into other asset classes that can benefit from things like settlement that Jen mentioned early on? Can I ensure that I'm able to move money, at a reasonable pace to keep up with the duality of a transaction as I move assets and as I move money around it? So there's certainly this regulatory sort of angle that we need to look into, but I think there's a lot of white space that, as Andres mentioned, we can focus on. But at the end of the day, this is all driven by the end clients, which is you all, and by association, the investment managers who basically have a demand on people like us who are asset servicing or SWIFT that essentially moves money, to say you really need to keep up with the hyper-financialization of the world, because suddenly Web3 ethos is all about ownership economy. Suddenly I begin to financialize things that are not traditionally financialized. Identity, for instance, or healthcare records, for instance. I need a better transactional infrastructure, and I need to be able to keep up with this fragmented sense of financial system that we have today, and that's also true for crypto, by the way. Liquidity is very fragmented. I need to amalgamate them together. So I would say those are the few things, but we can't solve all the problems. We need to actually first find a killer sort of use case. So this industry has benefited, whether it's real estate or whether it's private equity. You said this industry has really done well. Can we just take the tenets of this and replicate this forward?
Right.
I think.
No, it's a great point.
Can I quickly add on that as well? Because I think it's amazing that we do have this, infrastructure that's going to potentially revolutionize the financial services. But at the same time, I think it's really important that what we're talking about, the changes can translate into real values for, for instance, on the primary market side for the issuers, and then on the secondary market side for the end investors. So at the moment, for instance, if an end investor or issuer is to choose tokenization other than the traditional route, there's not really any sort of like pricing benefits, right? So if anything, it's probably more expensive to issue your securities via blockchain or to trade a tokenized bond. For instance, one of the really big issues that we face for tokenized assets at the moment is that there's very little secondary market liquidity. So a lot of the time, it's like almost like a private placement. People just buy and hold. So I think ultimately, we need to see, I think the likes of issuers, the likes of investor community, they need to see the true money, right, where the money really is.
No, that's a great point. I don't know if Andreas or Bill, if you had anything to add to that?
I was just going to say, for capital markets, that the industry is massively inefficient. And the move to Web3, the on-chain future is inevitable. I think it's absolutely spot on. If we don't make this process more efficient, and I think this goes to the question as well, the industry needs to get behind it and see that there is true value to this going forward. So I think that's where the demand will come from, and I think there's lots of clever people here that will be able to help with that.
Fantastic.
I agree with my colleagues. If blockchain allows financial institutions to make the markets more efficiency and break up barriers or frictions between players, it will be an exit, and banks will be pushing in order to adopt this kind of technology.
Brilliant. Well, we're almost out of time, but I just wanted to do one last recap, just to say, for each one of you, if you had any views regarding, to take everything you just discussed in terms of where we're going in the industry, related to a centralized authority in the decentralized tokenized world. And I'll start with Bill and Sean, I guess, from between your backgrounds. I don't know if you had any thoughts on that.
Yeah, I think there will need to be some type of authority. So for securities, you've got Anna today that issues those securities. So I think something like that will be needed just to make sure that you can trust that the asset is what it's stated to be, that there's a correct ID associated with it, and everything else is structured around it. So I personally think there will need to be a body of some description that can manage it.
Yeah, I think that's a great question. For me personally, I think the real agenda should be for the industry to come together and really discover and foster real use cases that deliver such strong value that left zero doubt in terms of that upfront investment and adoption for blockchain. And that makes almost the debate, between decentralization versus centralization a secondary question, as in, it should really apply when when it actually makes sense. So let me give you an example. So very traditionally, I think the likes of trading and clearing are very, they usually benefit from a deep, large liquidity pool, and to achieve that economy of scale, it's usually centralized. So it probably does not make much sense to decentralize for decentralization's sake. Whereas I think if we're talking about use cases, well, transparency matters, trust matters, and the real access to the different status of workflow matters, then decentralization might be a better structure and system to apply in those cases. So for me, I think it really depends on the value add. In an ideal world, I think decentralization and centralization should coexist, just like what we see in our real economy nowadays.
Good. Well, we're at the end of the discussion. This has been really informative, very productive. I want to thank you all very much for taking the time to join me on stage today, and everyone here that's present as well. Thank you all very much for your time. Thank you.
Thank you.